Hi everyone, and welcome back to Study Squad SA. Today we're tackling a really important topic for Grade 10 economics, the public sector. Now, this might sound a bit dry, but trust me, it's everywhere in our lives, from the roads we drive on to the electricity we use, and even the grants some families rely on. So let's dive in and make sense of it all. Okay, so what is the public sector? Simply put, it's all the parts of the economy that are owned or controlled by the government. This includes central government, that's national level, like parliament, provincial governments, local municipalities, and also state-owned companies. Think about Eskom, Transnet, and even SABC. These are all part of the public sector. The public sector isn't just about government buildings and officials. It's a huge consumer and producer of goods and services, and it plays a massive role in trying to improve our economy and address issues like poverty and unemployment. Now, why does the government even get involved in the economy in the first place? Why don't they just leave everything to businesses? Well, there are several key reasons. Firstly, to protect us from things like monopolies. Imagine if only one company controlled the supply of electricity. They could charge whatever price they wanted. The government steps in to prevent that kind of unfairness. Secondly, the public sector aims to provide equal opportunities for everyone. This means ensuring access to essential services like healthcare and education, regardless of your background. Thirdly, they guard against unfair pricing. They also work to protect workers, setting minimum wages and maximum working hours to prevent exploitation. And finally, the government controls strategic enterprises, things like electricity generation, Eskom, and water supply, because these are so vital to the country's functioning. So how does the public sector actually intervene in the economy? They have a bunch of tools at their disposal. They maintain law and order, which is fundamental for any economic activity. They collect taxes, which, let's be honest, nobody loves paying, but they're essential for funding public services. They spend that tax money through the government budget on things like schools, hospitals, and infrastructure. They can even own shares in companies like Transnet, giving them a degree of control. And crucially, they influence prices through things like price ceilings, price floors, and subsidies. We'll unpack those in detail shortly. Let's start with the different kinds of intervention. The first one is taxes. There are two main types, direct and indirect. Direct taxes are paid directly by individuals or businesses to SARS. That's the South African Revenue Service. Think of things like income tax, where a percentage of your salary goes to the government, or company tax, paid by businesses on their profits. When we pay taxes, we have less disposable income, less money to spend on things we want. This can actually reduce demand for certain goods and services, shifting the demand curve to the left. Then there are indirect taxes. These are taxes added to the price of goods and services. The most common example is value-added tax, or VAT, which is currently 15% in South Africa. So when you buy something at Checkers or Pick n Pay, 15% of the price goes to the government. Another example is excise duty, which is a tax on specific goods like cigarettes and alcohol. These taxes serve a couple of purposes. Firstly, they increase government revenue. Almost 40% of the government's income comes from indirect taxes. Secondly, they can reduce demand for products that are considered harmful, like cigarettes. And thirdly, excise duty makes imported goods more expensive, encouraging us to buy locally produced goods. Both direct and indirect taxes ultimately mean we have less money to spend. Now, let's talk about subsidies. These are basically the opposite of taxes. Instead of taking money out from people, the government gives money to people or businesses. There are subsidies to consumers and subsidies to producers. Subsidies to consumers are designed to encourage us to buy certain products. For example, the government might reduce the VAT on essential food items to make them more affordable. They might also give vouchers or grants towards buying specific things. Subsidies to producers, on the other hand, are given to businesses to help them lower their prices or increase production. A classic example is farming subsidies. Farming is a risky business. Droughts, floods, crop diseases, it's tough. Farmers also have high costs for things like diesel, machinery, and fertilizers. So the government provides subsidies to help them produce food at affordable prices, ensuring food security for the country. The government used to subsidize the price of bread, for example. However, subsidies aren't always a good thing. They can interfere with the natural workings of the market. They can also be expensive for the government to maintain.
Next up, welfare. Many governments provide welfare grants to people who are unable to work. In South Africa, we have old age pensions, disability grants, and child support grants. These are a form of transfer expenditure. The government is transferring money from taxpayers to those in need. Given the high levels of poverty in South Africa, there's a lot of debate about whether the government should also introduce a basic income grant, a regular payment to all poor people, regardless of their employment status. Now let's move on to maximum and minimum prices. Sometimes the government decides to fix prices for certain goods or services. A price ceiling is the legal maximum price something can be sold for. The idea is to make essential goods affordable for everyone. However, if the price ceiling is set below the normal market price, it can lead to shortages. People will want to buy more at the lower price, but producers won't be willing to supply as much. This can create a black market, where goods are sold illegally at higher prices. A price floor, on the other hand, is a guaranteed minimum price. This is often used in agriculture to protect farmers' incomes. If the price floor is set above the normal market price, it can lead to a surplus. Producers will supply more than consumers want to buy. Finally, let's talk about production. The public sector produces two main types of goods: public goods and merit goods. Public goods are things that everyone can use, like roads, street lighting, and libraries. These are often non-excludable, meaning you can't prevent someone from using them, and non-rivalrous, meaning one person's use doesn't diminish another person's use. Merit goods are things that are considered good for society as a whole, like healthcare and education. These are often underprovided by the private sector because they're not always profitable. South Africa has a number of state-owned companies, like Telkom, Transnet, Sasol, and Eskom. Since 1994, the government has started to privatize some of these companies, meaning they've sold shares to private investors. And finally, let's touch on minimum wages. This is the lowest wage that can legally be paid to any worker in a particular sector. Minimum wages are designed to protect workers from exploitation and raise the living standards of the poor. However, setting a minimum wage too high can actually lead to job losses, as employers may not be able to afford to pay it. It's a delicate balance. Okay, that was a lot. Let's quickly recap. The public sector is all about government involvement in the economy. They intervene for reasons like preventing monopolies, providing equal opportunities, and controlling strategic enterprises. They use tools like taxes, subsidies, welfare grants, and price controls, and they produce both public goods and merit goods. So how can you study this effectively? First, make sure you understand the why behind each intervention. Why does the government impose a tax? Why do they offer a subsidy? Second, practice drawing diagrams to illustrate the effects of price ceilings, price floors, and subsidies. And finally, try to relate these concepts to real-world examples in South Africa. Think about Eskom, SABC grants, and the VAT you pay when you shop. Don't forget to like, subscribe to Study Squad SA, and share this with your classmates. Good luck with your studies, and we'll see you in the next video.